Yo, this is Deadman with your buzz for March 23rd, 2009. So today we got the long-awaited bank stability plan from Timothy Geithner. And Wall Street, for one, is absolutely loving it. Stocks on average are up 4 to 5% last I checked. And some of the best performers are actually the bank stocks, the ones at the heart of our economic crisis. And it's not a surprise that they're doing particularly well today, because the Geithner Plan is, in essence, the perfect solution for the banks. Because what it will allow them to do, if the plan is implemented, they will be able to sell the worst of their worst assets, the assets that are rotting away on their balance sheets, and they will be able to pawn off the vast majority of the risks of further non-payments and non-performance to the U.S. government and ultimately the U.S. taxpayer. That is the essence of the plan, frankly. And what's the creative thing here is how the government is going about doing it. Because A, it can no longer ask Congress for the funds to continue to bail out these banks or to potentially consider buying these toxic assets. We have wasted way too much money, and the public appetite for these continued government bailouts is basically nil. It wasn't much last fall. It's a lot less right now. So what Geithner has done is totally circumvented our democratic elected system by going to the Federal Reserve and giving that agency way more power than government ever intended it having, and making them the primary conduit with which this plan will be implemented. What the government has also done that's interesting is because it will not be able to afford, if it were to buy up these assets or take on the responsibilities of these assets by itself without considering the possibility of renegotiating these contracts with bondholders and the people who own these assets and who have insured against these assets, something that the government has refused to do for whatever reason, whether it be the sanctity of the contract or our capitalist system. It refuses to consider that as a possibility. And if it continues to do so, it cannot actually afford to take on all of these assets. It would overwhelm our balance sheet. It would send our foreign investors fleeing for the exits, causing interest rates to soar, and creating a lot more problems than we currently have. So what it's done, another creative little technique here, is it's partnering with private investors, hoping to get the capital and buying power of private money to participate in this plan by offering some fairly generous incentives, and then leveraging up the money that we put into the plan to buy these assets. So in essence, we're going to be able to purchase up to $1 trillion worth of these assets while putting down really a fraction of the amount of money in real capital. Now, just put aside the fact that leverage and overuse of leverage was in a large part what got us into this current mess. It also creates a interesting dilemma, because the core assumption that Geithner is operating under is that the markets right now are not operating rationally, and that the prices of these assets are at levels that they shouldn't really be trading at. And if you took a look at true cash flows of these assets and true default levels that some of the real estate and mortgages that are underlying most of these assets are trading at, then the price of these assets should be much higher. And that is his core assumption of the plan. And if he's right, the plan has a legitimate shot at succeeding. But if he's wrong, and prices are actually true representation of the value of the underlying assets, then the Geithner proposal will fail. It's doomed to fail. And we will be merely throwing good money after bad. And that is the assumption that a lot of people that I read and respect have come to, whether looking at metrics like household prices to per capita income, or whether it be consumer debt to total GDP ratios, or just reversion to the mean type of analysis in terms of adjusting for the bubble and trying to find out where we could eventually end up. Suggests that the prices of these assets have a ways to go to the downside. And again, if that's the assumption, the Geithner Plan is doomed to fail. Personally, I am not smart enough or knowledgeable enough to know which assumption is correct, And the answer to that will come in due time. The one thing I will do is give credit to Geithner for coming up with a little bit of creativity in this plan and crafting it, because frankly, if we continue to refuse to renegotiate some of these assets and with some of the bondholders and talk about actually making them suffer some of the losses for bad bets they made, if that is off the table, then our options are pretty limited. And this gets around some of the problems that other alternative proposals would likely have run into. So he gets credit for financial creativity. However, I would also suggest that at least part of the reason we're in our current mess is because of financial creativity. It'll be very interesting to see how this all plays out. That's today's buzz.